Good morning, everyone. It's Alyssa Corum and Ed Carson here with your market update. It is December 31st. On today's show, we're taking a look at Canada Goose, Okta, and Alteryx. But first, let's check in on those major indexes. Right now, we are up across the board. We had the Dow leading gains up about 0.8%, while the S&P 500 and NASDAQ are up about 0.5% each. So trying to end the year here on a bit of a positive note, but looking at the big picture here, it has not been a great end of the year.
No, it is not, and all the major averages are down for the year because of this fourth quarter. Really big losses. We've had, we're trying to get a rally attempt, and that's nice, but it's like we've basically been up. This would be the third day out of 4 days, but really, what does that mean? We've taken away about 3 days of losses. If you look on that, this is the chart of the NASDAQ. There's a little green line there. It's like basically that's the 10-day moving average, and we're just trying to get above that, and we haven't done that since December 6th or so, December 3rd, depending on what the average is. I mean, that's a pretty short-term trading line. So again, yeah, we're up, but it's like, in the context of all that big down, I mean, we could easily come back down. Right. That's why you had to wait for a follow-through day, wait for that confirmation, wait for leading stocks to break out before jumping back in.
That's right. So speaking of the follow-through day, potentially when we do see that, so typically that happens at least on day 4, right, of the rally attempt. Yeah. And so what would we want to be looking for heading into the new year if things do start to continue moving higher?
Well, I mean, obviously what you'd be looking for is a big day on one of the major averages, a really strong gain, big volume, higher than the day before, and the bigger the better on both.
Right.
And then you want to see leading stocks breaking out, and that would be a sign. Now, obviously, we've had a couple follow-through days, and that happens sometimes.
Exactly.
And so it's not a guarantee. You don't have to just go rushing in like this is the greatest thing ever. We're never going to go down. It's like you might in that situation you might tiptoe into quality stocks, moving into buy zones, but don't have to go crazy.
That's right. Well, let's check in on some stocks with some interesting charts here. We do have Canada Goose trying to rally today with those shares up nicely, but it's hovering near some recent lows.
Yeah, I mean, this is not one to be thinking really for your watch list. In some ways, it's up today because it opened a flagship store in Beijing. That seems to be getting good crowds, and the stock has really fallen. They've come under pressure on the U.S.-China trade war, oddly enough, even though it's a Canadian company, because Canada arrested the CFO, Huawei CFO, and that one really, there was a feeling that maybe Chinese people would turn away from that, but maybe not.
Interesting.
But it's a long way to go, and that's also just a sign in a correction. You can hang around thinking things are going to go well, and then they don't. Something bad happens, and it really hits you, and it may take months for this to recover, if at all.
Sure, up nicely today, but still hanging out under its moving averages. And we also want to check in on Okta today in the security software group, up nicely today here as well, looking like it might be nearing a potential buy point.
Yeah, it's sort of a wide and loose handle, but I mean it's a correction. I mean what are you going to do? It's like it is a proper handle. It was nice that it rebounded from its 200-day and reclaimed its 50-day line last week.
Right.
This company isn't profitable yet, but it's getting close. It's one of the 2017 IPOs like Canada Goose. So it's looking interesting.
Exactly. So for your watch list, you want to be looking at stocks that are setting up nearing buy points. So that way, when you are ready to dip your toe back in the water, you will be able to already have your culled down list of stocks that are actionable. Yeah,
but I mean, it's acting very well today. But again, these things, if the market turns south, I mean, these have had big gains. You can imagine them being wiped out pretty quickly. Okta is pretty volatile. So I mean, it's like that could quickly turn south on you. That's why you want to wait for that proper buy point.
That is right. All righty. And we also want to take a look at Alteryx in the computer software database group. And it is also forming a base in a base on base formation. It's still about 14%, though, below a potential buy zone.
Yeah, this is interesting. And again, another one that's really volatile. It's sort of like a self-service data analytics software platform. And so, it'd be at the left-hand side of that base. Relative strength line, it's been acting pretty well, a lot like, Okta. That sort of has something that looks like a handle that isn't a proper handle. It's too low, it's too wide and loose. But that's interesting. It is starting to turn profitable. Technically, it's supposed to have an annual loss this year and next year, though. Honestly, if it has a decent quarter, if it beats by a little bit, by just a few cents, it will have a profitable year. So it seems to be one of those, it's like just turning the corner. It's got
Right.
strong revenue growth. So it's definitely one to watch. It's not, that can often be sometimes when you see things like Workday, companies when they finally turn profitable, it's like, okay, they get that because they have that big revenue growth, and then it's like, okay, now it can feed to the bottom line.
Exactly. Very important to watch those fundamentals. Okay, everyone, thank you so much for joining us today. Any last thoughts as we round out 2018, end of the year?
Well, let's hope we'll have a better 2019. There will be trading rallies, even if it's a volatile year. There will be opportunities, presumably, to make money. The point is to stay sharp. Know when to be in, know when to be out.
Stay nimble, everyone, and have a very happy new year. We'll see you back in 2019.